Let's connect with a corporate voice. Midhani is in focus to talk about how the stock has performed. The business has done quite well in the face of a slowdown. They've grown nearly 37% in the first half, and there's lots of opportunities ahead as well in defense, in aerospace. We talk about their market share and niche commodities. Dinesh Likhi is the CMD who is now joining in to discuss that and lots more. Good morning and lovely to have you on ET Now. To begin with, it's been a great year for you so far, fiscal 20. You've seen more than 35% surge in your sales, while some of your peers like the commodity companies have suffered due to the weak demand as well as the pricing. So what has stood out for you?
See, there are two parts we have done. One is we have modernized our obsolete equipments. We got new furnaces also. And because of that, our equipments are in healthy conditions. And since they are in healthy conditions, we are able to get more output from this. Secondly, the order book has become healthy because space sector has grown and defense sector also is inching towards growth. So order book as well as healthy equipments have paid us what we are looking for in the first half, and the similar trend is expected in the second half.
You know, ultimately you're a metal company. For a metal company, the most important variable factor is not local demand but global prices. How do you keep yourself insulated? Because if I look at your last 2 or 3 year performance, you've managed to grow both in pricing and realization irrespective of what's happening to global steel prices.
See, we are high-end alloy company. In a high-end alloy company, the raw material as a percentage of revenue will always be lower than the commodity market. So we are the company which is having high EBITDA margin, but that will depend upon which year, which product mix is coming. Last 2 years, where product mix has shifted to high-end, especially from space sector and defense sector and nuclear energy. Reason of that is that these orders are of high-end and customized alloy. The raw material doesn't affect much in terms of realizations. That's why we are able to get growth in revenue as well as realization.
On a top line basis, grow more than what you did last year?
Yes. Last year, I was telling that order just came in from the space. We were trying to build up our equipment also for that. Now the equipments are in healthy conditions, and this year the performance will definitely better in the second half.
Also wanted to understand what exactly is the situation with regards to, import of raw materials, because as we understand, you have to import all of your raw materials, including nickel as well as cobalt. And, these are very highly volatile in terms of prices. How exactly have these prices fluctuated of late, and how has forex really played a role into your procuring your raw materials?
See, we are basically two raw materials we procure for our alloys. One is nickel alloys and another is a cobalt. Now nickel is indexed to London Metal Exchange, and we take an average of the month. So we have booked that orders. Whatever orders we are having, the nickel orders has been hedged against those, but LME always will play an important role. Fortunately for cobalt, we have taken the material and stocked the material considering our order book as well as the bottom of the cycle. Now the cobalt has little taken increase, but however, we have our sufficient stock till financial year 2020.
When you say space, it's always this exciting thing. We start imagining things. What exactly, where are you getting your space business from? How is your deal structured? Is it do you have IP protection there, or these are pure business markup businesses?
No, see, this is an intellectual property product called margin steel we produce for ISRO, Indian Space Research Organization. When they increase the launches, which is happening now, this intellectual property product, which is exclusive to Midhani, is produced more. Similarly, the titanium alloys, which we have made them customized for them, that also product get enhanced. Now, as far as the pricing concerned, they know the previous price, they know the raw material prices which are happening, and based on that we discuss across the table through an open book, and we decide the prices for order to order. So project to project we decide the prices. It is not nomination basis prices are given, it is on the open book discussion they decide the prices.
Now, tell us about the current order book and across what segments is it split currently, defense, space and the others?
See, currently we have about 1800 crore orders and about 75 to 80% order is from the space sectors and remaining about 10% from defense and 10% from the energy sector.
Okay. So if I have to, let's say, classify your total business into regular business versus IP stroke niche products where you have pricing advantage and you have an IP protection, how would you split your revenue?
See, if space sector is going to grow the way it is growing, the nuclear energy sector, which is predicted that it will grow now faster in next 2 years, and the defense sector, because of Make in India, a lot of products will be bought. These niche products will be required in more. In addition, we have to develop new products where the technology will be coming from abroad and they will be making in India with customized alloys. That also will be a niche product but under technology transfer. So we'll be making more and more niche product. We'll be making more and more IPR driven product, and that will help us to increase our revenue as well as the bottom line.
So if I have to, let's say, define your company, are you a business which is completely cost plus business? The more capacity you will add, the more revenue you will have. Since you're in the IP business, your margins in a sense will remain high and will remain in a band. So are you a company which makes steel, but the way to look at your company is that you are an intellectual property specialized steel company which works on a cost plus model?
I will not say that, because the reason is can classify our materials not only steel. There is a steel, there is a nickel alloy, there is a titanium alloy. So it is not a pure steel company. In addition, we are getting to our aluminum alloy. We are talking about some other alloys which are more difficult alloys. So it's not a pure steel company. Number two, all our businesses are not cost plus basis, what you're talking about. About 20% businesses, sometimes we take from BHEL, from other sectors on tender basis. So it depends upon how those sectors are growing. If our sectors where IP products are being given, obviously we have more advantage in terms of price as well as revenue and realization. But when we are talking about competitions, we have to compete against import, we have to compete against the domestic players, and we have to win the orders. So it depends upon how the order books are going to be there.
Do you enjoy natural protection because of your ownership? And what about private sector competition here?
Nothing of that kind.
Okay.
See, now India private sector is increasing now. They are going to invest in similar facilities. They will come up on the similar product for defense as well as space and energy. It's a matter of time that they get qualified. But as far as we are concerned, it is nowhere the ownership is giving advantage. It's a product which is giving advantage, the technology which is giving advantage. And the private sector, when they come and they equal the technology and intellectual property, similar products, let's see that how the competition will increase.
Let's close the interview with some numbers from you, and I'm sure the street also wants these estimates, because you've set a 15% revenue growth target for FY20. However, in the first half itself, you've clocked 37%. So should one assume that you're going to be upping your guidance significantly, and if so, by how much?
See, I cannot predict, but the second half will be on the similar line. So let's see how things happen in the second half. So third quarter we are going to close now on a similar line, and the fourth quarter, let's see how things will happen. So I cannot give an exact number, but the similar growth will be there in the second half.
Around 37% growth?
No, it's not around 37%, because obviously the second half of the last year base was different, and that this year the second half the base will be not that high, because the first half base to second half base things will be different. The last year the second half we did better. From that better we have to do maybe 15-20%.
Okay, we'll wait and watch then, and I think only time will tell. But thank you for sharing with us a view on all of your ventures, the space business, and how things are shaping up on your order book.
Thank you very much.